You're watching Stock Watch this week. I'm Ndawuleng Lechela, and joining me to unpack your stock-related questions today via Zoom is Kearabilwe Nonyana from Scope Prime Africa, and we'll be joined shortly by Zwelakhe Mnguni from Benguela Global Fund Managers. So be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Yeah, thanks so much for your time this afternoon. I guess let's start by assessing the trading week that was. I mean, quite eventful from a Russia-Ukraine peace talk front. We also had some U.S. retail earnings coming through, Fed minutes. But I guess in focus today particularly is Trump's address at Jackson Hole for further clues on monetary policy. What are you expecting out of that address? Do you think he might touch on whether we might get cuts come September? Do you think he might touch on, that hot topic around the Fed's independence?
I think we expect some fireworks. There hasn't really been good blood between the Fed chair as well as the President of the United States. And just listening to the U.S. Treasury Secretary, Mr. Bassett, come out during the week saying he feels like the Fed fund rate should be 150 basis points lower than it is right now. I mean, it speaks about that independence, that Trump really does believe that interest rates have been kept too tight for too long. And I think it's also affecting the forward rate agreements on the forward rate agreements. And why I said this, there was 100% chance of a rate cut in September at the beginning of the week. But since the US PPI data, it's come down to about 75%. And that speaks about the jitteriness of exactly where that economy is. Not that it is weak. It's just the fact that even in the FOMC minutes, they do see upside risk to inflation. And that PPI data did not help it much. What also doesn't help much is the U.S. economy is almost at full employment. So if we had to look at price stability, labor data is looking great. The only thing at the forefront of the Fed's mind is price stability. And currently, inflation is still too high for their liking.
And I mean, we also don't know how tariffs are going to impact inflation. So I guess it really is a wait and see approach when it comes to the Fed. Is this what's also just, I guess, fueling the choppiness that we've been seeing playing out in markets? Because listen, I can't say whether we've had a really good week or a really bad week.
I think it boggles the mind, because on some days you're trading positive, like today. The market has been buoyant right across global markets. I just think right now the market is not really on firm footing. And why that is first of all, the Jackson Hole address by the Fed chair. And coupled with that, looking at the FOMC minutes, it's still very hawkish, from even though there were some dissenting views from Jerome Powell's hawkish stance. But what I also think right now is what's going to be happening in fiscal policy in the United States with this expansionary fiscal policy that Trump really wants to have, and the fact that in the next 12 months there needs to be refinancing of U.S. debt. Coupled with that, it's a very, very, very weak dollar. It's so weak that for the first time in my life, I thought about buying currencies, just purely at where the dollar is. I mean, I was looking at a technical basis. The US dollars are between May and now formed a triple bottom at around 1748. And for me, that triggered something in me and said, you know what, the dollar is really oversold even at those levels, as strong as the rand has been.
And just on that, Gia, what have you made of the dollar's appeal as a safe haven asset, particularly this year?
It hasn't been seen as a safe haven asset, and I think, truly being speaking, it's because of the fact that U.S. Treasuries have not been seen as a safe haven asset. There's a correlation between dollar sell-off and Treasury sell-off, and this is the first time where truly speaking, the market is starting to reevaluate whether U.S. Treasuries remain the risk-free asset in terms of valuations across the globe. And truly speaking, right now we live in a world of assumptions and investment, and that assumption is really one which we can't be totally 100% correct about.
Yeah. All right, so let's bring you into the conversation. We're just talking about I guess the US's appeal, US assets appeal, as well as what's been playing out when it comes to monetary policy and how you are, I guess, navigating this environment. Today in particular, everyone is waiting on Jerome Powell's speech at the Jackson Hole Economic Symposium. What are your expectations from that? Are we also in for a cut come September? I don't know. Everything just seems so uncertain.
Yeah, thank you. I think my expectation is that we've got a 50-50 chance on the rate cut in September. I think Jerome Powell is quite worried about making another mistake on inflation. I mean, if you remember during COVID, they had suggested that inflation was transitory and they were proven wrong. And I think that's a black mark on his track record. So he would probably want to make sure that he sees that inflation stabilizing. I think the last number was 2.7. But I think what we can expect out of the news today, or at least the minutes, I think they'll probably discuss their views, the different views about the impact of tariffs. I think it looks like the tariffs haven't had a major impact in the actual inflation, but there is something else that is coming through, is that companies have been absorbing a lot of those tariffs. The question is for how long?
You're absolutely right. And then I want to get into the question that has come through from one of the viewers around your views on the U.S. Consumer. Sentiment continues to, decline, and retail earnings paint a mixed picture. Target not doing so well. Meanwhile, Walmart topping market expectations. But Walmart has also mentioned that it has been absorbing those tariff costs. Zwelakhe, I'll give that to you.
Yeah, I think the U.S. consumer is struggling, to be quite honest, or at least deteriorating if you look at the sentiment. I think the primary thing is that those that have been making headway, like Walmart, have been using a strategy where they price on a basket. So they'll take the fast-moving products that have tariffs, and they'll keep the price competitive there, but then they'll increase on the products that are less moving fast, and they would then turn around and attract customers through the fast-moving products and basically balance the tariffs that way. That is how, the likes of Target have lost out, because they kind of took a more broader approach on their product pricing.
And just on those earnings, then, Gea, I was also looking at Home Depot's numbers. They also seem to be an indication of where consumers are at as it speaks to discretionary spending, right? It doesn't seem like, or rather it does seem like shoppers are spending less.
I mean, sometimes, to be perfectly honest, the economy is a lot more psychology than anything else. And I think it's because of this uncertainty that has to do with tariffs that essentially gets into the mind and essentially affects confidence of the consumer. Essentially, the consumer goes into hibernation. And we've seen it in economies such as China during COVID, essentially, where the consumer almost front runs the tariffs, front runs the economic and socio-economic problems, and essentially goes into hibernations and saves more. Because, with these tariffs, because they are a tax on people, you'd expect that there'll be broader ramification within the economy. And to be perfectly honest, the ramification is going to go into jobs. And when people feel uncomfortable in the safety and the security of their job, they tend not to spend more. And what you start to see in those numbers from Home Depot is the fact that even management starts not being confident, and essentially also puts out less production and less front buying in terms of warehousing. So it's all those effects on confidence that these tariffs are going to have on that economy that's also affecting the consumer.
Now let's look at another sector in the US, the tech sector. A question coming from a viewer saying, what would you pick up, or rather asking, what would you pick up, or what would you be picking up first, as we've seen that tech sell-off ensue over in the States? All quality business results looking good, but what's your top pick when it comes to the tech sector, Zwelakhe?
Look, I'll still be inclined to favor the AI stocks. I think that's a big wave that's going to continue. So the likes of NVIDIA, it was pricey, and it's it could still be going sideways for a while. But I would probably think that the tech sector, AI-related stocks might do better than, for example, software stocks are going to face some challenges as this AI is actually software development can now be done by anybody who's not literate in terms of programming languages. So it is a risk to the software sector, but I would still be inclined to look at companies like NVIDIA, Taiwan Semiconductors as well. Those would be the stocks that I'd look at.
And what about you, Gia? It seems like what I've been finding quite interesting is the push behind Intel, right? We got what's the SoftBank investing in Intel. We heard from the U.S. government committing to potentially take on a 10% stake, as there are hopes that they're trying to turn around that business.
It's a turnaround story, as you said, and I think in comparison to where other tech sector stocks are, I mean, essentially some of them, I mean, I'm looking at MicroStrategies, which is sitting on a PE of almost 5,000 times, and Palantir, which is one of the stock picks I have, which is sitting on 1,000 times revenue. So I mean, these are what you're going up against. And when you look at Intel, it's a smaller player in that space. Man, the market cap is just over 100 billion. The yield's about 2.128. But essentially, it's a turnaround story more than anything else, and trying to front run essentially the next mover in terms of change in market sentiment. In terms of the tech stocks in general, I'd look elsewhere. I'd look in China, as Zwelakhe was saying, with Taiwan Semiconductor, more than I'd look in the US. I think the US tech stocks are so fully priced that currently, essentially, you are literally buying a story and not buying valuation anymore.
All right, let's move over to another question. The viewer here asked, what shares would you suggest for a pensioner to supplement their pension? I'll start off with you, Gia.
To supplement, I mean, if you look at the telecom space, it's really done well, and most of those guys, most of the big players, they are really good dividend payers. Stuff like Vodacom, and depending on how your ESG views look, I mean, some like British American Tobacco, really is a good income generator, and essentially you've also seen it go up, get a lot of capital growth in terms of the share buyback as well. We saw it touch above 1,000. So I mean, these are the stocks that you can have that they'll be good income generators for you. But I'm also a bull on government bonds, especially on the longer end of the yield curve, if you're really going to want to take on some income exposure in your portfolio.
All right, Zwelakhe, let's get your recommendations. Just to remind you there, we were talking about shares you would suggest for a pensioner to supplement their pension.
I agree with Kearabilwe on the bonds. I think they probably offer the best return for low volatility, and I think if we get our act together as a country, it might actually be very positive for those bonds, and the yields could compress a bit. In terms of the stocks, I mean, I agree. One has to look at the telcos as one of the areas, but also the banks. I think the banks are offering quite decent dividend yields. So I would look at that. You want things that are stable at that age, and that's what I'm factoring in terms of my thinking. Is that at that age you don't want things that could be volatile, and banks and the telcos would probably give you a bit of stability relative to the rest of the market.
Okay, and let's just circle back to the telco space. There's a question here on Blue Label and whether it still has legs to run after the update it delivered yesterday. Viewer asking, should I nibble or am I too late? Yeah.
I think you're a bit too late. I mean, to be perfectly honest, what you're betting on right now is management execution on that listing of Cell C and what they can do with that Cell C business. Because essentially, it's very tough to look through some of these results of Blue Label without really getting a good lens. I often say there's some companies which have clean reporting. You know, it's just a good result where you do understand what's going on.
Yeah.
I think in terms of the capital structure of Blue Label in terms of recapitalizing Cell C has been so complicated that essentially it's very difficult for you to put your hand on essentially what is driving this valuation. So for
Yeah.
me, there's too much management execution risk, and for me right now, if you've been in it, keep it. If you're trying to nibble now, I'd say hold off.
So basically, to our viewer, walala wasala ne.
Essentially.
What are your thoughts around Blue Label, Zwelakhe? Would you be nibbling at the moment? Kia did mention there is a lot of confusion around, that restructuring effort, which would include potentially listing Cell C.
I'm very strange that they increased earnings by 500%. The stock is down 2%. It should be a signal that the market does think that it is run its full course. So I believe that what is left in that business is, as Kearabilwe says, when execution risk. And I'm not sure if over time they could not be challenged in their airtime distribution business by the banks and the other payments businesses.
Yeah.
So the fintech companies could actually challenge them in that space. So they need to make moves actually in the opposite direction as well to try and see if they can participate in the fintech area more boldly.
Now, there's a question here around the education stocks, particularly Curo, and your view on that one, Zwelakhe.
Yeah, I thought the results were disappointing, to be quite honest. I thought they came through quite disappointing. But, I mean, it's a very good sector to be in, very defensive. I think the market will digest this results and move on. But I do think that in the long term, it's a good space to be in. But the results were very disappointing.
And just your take on the education stocks, Kia. I think in one of the results, Cura did mention that it is seeing somewhat of slowing student numbers, or the addition of student numbers in the lower grades, which then speaks to, I guess, younger parents that may be struggling within this economic environment.
I think being a parent myself, I think schooling would probably be the last place you want to cut. But I mean, in terms of the economy and where it is, you can't outgrow a failing economy. And to be perfectly honest, you'll start seeing it in those numbers. I think Zwelakhe is right that this is a good sector to be in. And I think at the beginning of my career, this was one which I thought would be a 10-bagger, and it's remained there. I mean, I was looking at the share price today. It's the same share price that it was when I started my career. So to be perfectly honest, if I had put money in it at that time, I'd be at the very same place that I would have been in at that. Love the business model, love what it's trying to do within the space, but I think Advertech is a better pick in this environment because it caters towards first of all higher LSM schools, and then after that also more premium private schools, and also goes into tertiary education, where you've seen the number of matrics which are finishing matric every year versus the number of public university spaces. I think that's more of a play that I'll take in this industry. I'm curious sitting on a 45 PEs.
Yeah.
It's really fully valued.
I mean, we had the graph up on the screen a few moments ago, and you're absolutely right. That stock is really just trading sideways. No upward momentum, not much downward momentum either. Let's take a look at another sector. Here the group is, the viewer is asking about the Easy Equities owner, Purple Group, asking if it's a long-term hold at the moment, Zwelakhe.
I don't look at Purple, to be quite honest, but
okay.
I mean, there is a lot of trading that's happening at the PA level, and I think they are competing against the brokerage businesses within the banks. So they seem to have gained a lot of market share in that space, but I don't look at the stock quite closely.
Has Purple Group overrun a bit, Kia, or is it still, or is there still some, upside to that share price?
Thinking that I am in brokerage, I mean, I can give a bit of some insight into this. I mean, once they introduce that 25 Rand a month inactivity charge, or what they say the loyalty fee, essentially you saw a jump up in earnings. And when you really strapped out, is it from new client activity, or is it just the fact that they got 25? They literally are getting 25 million every month from a million active customers that they have. And essentially, it's just that they're getting 25 million rand a month from the active customer base that they have.
Okay.
And to be perfectly honest, you get to a point where you almost go ex-grossed, and your customer per acquisition numbers start to go up as you need to service more clients. You'd think that they'd reach scale because they're so large. They've taken advantage of the distribution channels through Capitec, Telkom, and also Discovery. But I think right now they're heading into a space where it's going to be very X growth. Do I think that there's more trading activity? It depends on Trump. If Trump comes out with something where you will see record trade flows, and I can tell you, you'll see it even through my desk too.
All right, all right. Yeah, hey, Trump. Yeah, no, it's going to be a long 4 years, okay? It's going to be a long 4 years. Let's take a look at the restaurant space. What are you betting on that front? There's a question here around Spur versus famous brands, Gia.
Well, I think it was quite surprising that Spur did great numbers yesterday. I mean, essentially, they're saying that essentially foot traffic is down, but essentially spending per customer is gone up, which tells you that there's a bit of resilience within the brands that they have. Rockamomas, Doppio Zero, which kind of attracts higher LSMs, and the Spur, which is the family restaurant. I can be honest, my daughters love Spur, and I don't love it because every time I come out of there, my head is ringing because everyone is crying when we're leaving. But to be perfectly honest, it's a great business. It's done well. A bit too small, I think, at 3 billion. Famous brand, on the other hand, has great brands, but they're complaining that they are going up against other discretionary spending like betting. So you really never really know what's going on in this industry. But if I had to comment on Spur's numbers, they really were great yesterday.
And what about you, then, Zwelakhe? I mean, Spur even made a comment around retailers coming in to take market share on the back of these big supermarkets increasing their exposure, or rather increasing their ready-to-eat meals in these stores.
I mean, I think my starting point would be that this is a discretionary sector, as Kia has said. The truth is, it's always competing with other needs of the clients. And yes, the numbers did look good on Spur yesterday, but can they sustain it from here? I don't know. I think the economy keeps getting challenged, and the individuals are getting a lot more than they did a year ago. So I do think that we will see a meaningful slowdown in that sector. So I wouldn't be participating in that sector at this stage. I'd rather look at more staple type of consumer spending.
All right, so you're not looking at that sector not appealing to you. What are you looking at? Where are you seeing opportunity at the moment? What's your stock pick, Zwelakhe?
Yeah, I'd still say if I look at the broad sectors, I'd still say banks would probably be a good place to be in. I think I also think that the likes of Shoprite have pulled back a bit, and they're delivering, they're executing, and they are among the people that are stealing market share from these restaurants. So I would look at the staples, and I'd look at the banking sector, and maybe a bit of telcos. With Vodacom, the story in Egypt seems to be coming along nicely, and MTN also, it looks like they might do something on fintech. One hopes that if they do, they'll unlock some value there.
And then which one of those is your stock picks, or are you just choosing to stay defensive?
I'm choosing to stay defensive, but I mean, my stock pick is Morningstar. The US company that provides data and analytics, particularly to the financial services sector, and they rate managers. They do a lot of analytics in terms of research on stocks, and I believe that it's derated quite meaningfully in the last 5 years, similar to other players in the space. But it's got quite a resilient business model. I mean, they've got recurring revenue in their business, so there is certainly going to be continuation. It's unlikely that the fund managers would cut out, or the advisors cut out their source of data to make decisions. So they might also benefit from AI helping them with data analytics. So it might improve their performance rather than other companies that are threatened by AI.
All right, and what about you, Gia? Where are you seeing opportunity at the moment?
Well, for me, it's a short-term trade. I'm not betting any money on anything else, but just short-term. I think the U.S. tech is just very overvalued, and the one overvalued counter I'm looking at is Palantir. And essentially, what I'm doing is taking 125 put options September expiry. I think that essentially, when you break the price up into all the risks, the delta, gamma, and row risk, I think you can take a bit of volatility from that stock just purely because it sits on such a high valuation, almost 1,000 times sales. The PE is north of 3,000 times. I mean, if you had to tell that even to a university student, they'll tell you that's very overvalued. So short-term trade, I'm taking $125 put option September expiry on Palantir.
All right, gents, thanks so much for your time this afternoon. Now, that was Kearabilwe Nonyana from Scope Prime Africa and Zwelakhe Mnguni from Benguela Global Fund Managers. Do remember that Stockwatch pre-records on a Monday and Wednesday at 1 p.m. and is live at 6:30 p.m. on a Tuesday and Thursday, while Stockwatch this week is live at 12:30 p.m. on Fridays. Keep that in mind and keep your questions coming. For now, that's all from Stockwatch this week, but do stay tuned for lots more coming up right here on Business Day TV.